Hi, my name is Amy. Thank you very much for watching, and let's make some bad financial decisions together. This is for entertainment purposes only, so if you're entertained, please like and subscribe. Really appreciate that. So even my dog is groaning because we're talking about ULTY again. I don't think you believe that we were going to escape this. But they did send out an email yesterday to announce their new strategy expansion. And so right before they did their split on December 1st for ULTY, they started to introduce large caps. So that is no surprise, and I welcome that with open arms. The interesting thing for me for this, because they already had the ability to do hedging strategies for market declines. The prospectus has been expanded quite a lot since they have started this fund. But the most interesting thing for me is that they can do leverage option strategies to capture more upside during market advances. And YieldMate's team, they are very wary, for good reason, of leveraged plays. And I do appreciate them for that, because in a down market, your double 2x can really cannibalize what you own in the stock. So I know that if there is a severe overall market downturn, if the individual stocks that they pick turn to the worse, there will be a hit to the NAV. We are not saying ULTY never, ever, ever go down in NAV ever again. What we're saying is if you go down, you need to, in a reasonable time frame, go back up eventually. I think because right now, even with all the changes, it's only been a week, a little more than a week since they did the reverse split. But ULTY, if you look at the chart for it, it is a dividend trap. I own 100 shares now, which was 1,000 shares, but now it's 100 shares. But to me, ULTY's always been a very interesting experiment, because this isn't necessarily themed. We're just saying, hey, could you give us the absolute most amount of money that you can by you doing options and doing some of these more riskier, high implied volatility things, so that we can get a higher than average yield, which has always been what ULTY has wanted to do. But I think that, the disconnect was, could you give us the biggest amount of yield without totally destroying the NAV? And the reason for that is that even because the yield for ULTY is not static, so if we get 76% this time, even if next time it's 76%, no matter what the price is, it's not necessarily 76%. The next yield could be 78%, and if the NAV went down, the yield would be the same. But if nobody wants to put their money in, get a 70% in yield, have it be 100% return on capital, but you just see your principal, what you invested in ULTY, go down all of the time. And it's not that we don't understand that, we played this bet, everybody in the market thought it was good, the indicators were good, and then some thing that nobody knew about happened, and then all of a sudden that single stock that we placed a bet in went down 50%. That happens when you place bets on the market. It's just that I think with these large caps and less volatility things being in the mix, and the NAV being a little bit more stable, what we see is the yield can actually be the yield that it is. ULTY has made it very complicated, and people are very interested and fascinated by it, but they have made our lives and us as creators' lives difficult by making it so that it's very hard to tell what is the actual yield and what is the cannibalism of the NAV. So I appreciate this change, and I do believe that having better quality, better fundamental stocks that are lower implied volatility, so they won't get as much money from it, but something that will pad and make the entire ETF more resilient. Over time, it'll gain trust back in ULTY. And I was just looking today, and I could sell a put on ULTY, and it's a 30% yield. And if I get stuck with ULTY, it's paying a 70% yield. And so I can do a call on it and earn maybe like a 5 cents every time. But when it gets called away, I can sell puts again. And if the NAV is stable, I wouldn't mind doing that, because the price of getting stuck with ULTY is not super bad, because then you're just getting a 70% yield. So this is on my list of things that I could eventually start doing an options wheel with. And I always call it a dividend wheel, don't mind me. But I'm glad that they're listening to us. It might have taken a little bit. You know how sometimes people are just like they hear you, but they don't listen? But eventually we did get them to listen and comprehend what we as the investors are trying to say. Like, I don't mind the premise of ULTY, because like I said before, it's been a very interesting experiment that if you give fund managers no parameters besides make us a lot of money, what will they do? And then it turns out we actually do need basically regulations and say, like, actually, we need you to stop being distracted by the shiny objects and to be in better things. So this is the ULTY website. You can see we have the latest 2 distributions, which I think is going to be more indicative of what we'll do in the future. So even though we did a 10 for 1 split, so this was 5 cents and now it's 58 cents. But I think, and we'll know more in the future. And also, I'm not saying to get into ULTY, like, we've been burned enough times. So, let it chill out for a few months and then we can talk. And hopefully it's in several different types of markets between like now and like July next year. But I'll continue covering it because I think it's very fascinating. But I do believe we're going to expect like a 50 to 75% distribution rate from now on. Although YieldMax is coming out with their 100 club, so there might be once a year where we have the 100% distribution just so that it can be included in that 100% club. But maybe not. Maybe they've learned their lesson and they just want to keep it with this new trajectory, which I will also appreciate. I can just own the 100 club separately. Anyways, if you look on YieldMight, this is the deluxe only feature, which is setting your favorites, which is ULTY, ULTY, and KYLD, which is what we're looking at for today. And if you look at the My Favorites tab, and I need to actually implement the handling the logic for the reverse splits so that all of a sudden the distribution history over time for ULTY here doesn't go from 5 cents to 50 cents with no explanation or backwards math to make sure that, when you're looking at the chart over time, it makes sense. But yeah, you can see that the 3-month change for ULTY is wrong. But ULTY, let's look at an actual growth chart. So over the past day, and we're going to compare this to QQQI because I believe that ULTY, KYLD, and ULTY, they are basically all leveraged the NASDAQ 100. We're trying to beat that. Or we're not really trying to beat it, but like I would love to get yields that are a little bit higher and still kind of at least be in line with a major index, whether it's the SPY or the NASDAQ 100. So today, the ULTY has the most growth. And over the last 5 days, ULTY also has the most growth, but it also has the biggest swings. So I'm not recommending ULTY. It is way too early to tell. And hear me out, you might just have to be very, very, very careful with your entry point with ULTY. Because if you get it, down here when it is down, you'll be much happier than if you buy it up here, if you know what I mean. So, I just find it interesting that Curve and YieldMax are having basically the same growth curve, but Curve pays less and should probably over time have a little bit more growth appreciation than ULTY, but that remains to be seen as well. And if you look at the total real returns from December 1st, which will be now the benchmark I use for ULTY when I'm comparing all of these, the growth of $10,000 from December 1st, in QQI you would have $10,097.61. ULTY you would have $10,300. ULTI you would have the most with $10,615, and QILD would be $10,126. So since December 1st, your total return from ULTY is better than KYLD, but at this point, I think everybody is very zeroed in on the NAV, so we'll see over a period of time how ULTY's price appreciation. I'm betting that it doesn't go up as much as KYLD, but as long as it goes up at all, or at least just maintains around a $40 mark, and it does the 70% yield, I think for me, I will be investing in KYLD soon, but ULTY is still in the running if 6 months from now it's proven that it can be not totally degenerate. So the last thing I really want to do today is, these are the holdings of ULTY. I downloaded it from the YieldMax website, and I put them in 3 different categories. We have Alphabet, Amazon, the 20-year Treasury bond ETF, Broadcom, Morgan Stanley, and gold shares. I think that these are the low implied volatility, mega cap, really safe bets that they're going to appreciate in value over time. Then we have the second group, which is Coinbase, Bitcoin, Robinhood, SoFi, and the Southern Copper Corp. And I'm just assuming that's a copper mining operation. So this, for me, is higher implied volatility, but pretty known companies. Or, copper is a mineral, but it also has more utility than gold, and so the prices are more volatile. So this is slightly more volatile, but not completely degen. And then everything else, I'm pretty impressed because I don't recognize a lot of these, and I have not taken the time to look at their new strategy. And even the gold miners, we should put it in this category of higher implied volatility, which means they get more premium, but it's not completely degen. And then, more than probably around, we'll just put this over here, and yeah, so we're pretty much half and half. This is high implied volatility stuff, Analog Devices, Circle Internet Group, HCA Healthcare, IRN, Alcoa Corp, Jabil Incorporated, which I might be saying that extremely, extremely wrong, Lam Research Corp, Micron Technology, NewScale Power, Quanta, and Twilio. These are more implied volatility, things that they think are going to go up over time. So I like that they have a nice balance between these 2 or 3 things, depending on how you are looking at it. I like that so far it is a 70% yield, but I think we're in a heightened volatility market. So over time, I wouldn't expect the 70% forever if we go into a lower volatility market. But, you can't say I'm going to get a 70% yield when nothing that's not complete degeneracy is paying 70% yield. You can accept a temporarily lower percent of yield, have better companies in your thing, maintain your price, and then when volatility picks up again, you can get into these companies and get a higher distribution. No one's going to complain about a higher distribution unless the NAV goes down like a rock. So, in conclusion, I'm going to continue to monitor ULTY because I find it fascinating. Hopefully you all find it fascinating too, and hopefully at some point we can talk seriously about getting back into it. But for the moment, this is a wait and see type situation for me. Like at this point, I wouldn't sell out of ULTY if you are still in ULTY. But I mean, that's also not financial advice. That is my opinion. I'm not selling out of ULTY. But at this point, I'm willing to wait and see. And they used up some of their goodwill with this, but I think having it at the $40 mark and giving it some room in case the market goes downward, I think it was a good move overall. Anyways, speaking of YieldMight, I just started having the subscription plans that are available. So if you like YieldMight and you use it regularly, I have a standard plan and a deluxe plan. The standard plan, you get the no ads experience, which hopefully we'll be getting the YieldMax banner ads soon, so we will have advertising on YieldMight. Or you can do the deluxe plan, which has the my favorites functionality so far, and I will be working on getting you all the favorites across devices and the portfolio across the devices pretty soon. And anytime you support me, it helps make doing this channel and adding additional features to YieldMight more sustainable for me to do this as a full-time job. So I'm also started this channel called Amazing Financial Commentary, where in the evenings I pick a financial related video to react to, and I react to it. So if you want to support me in that way and get this monetized, that way I have an additional stream of income, I really appreciate that. And I really love to thank my members, Jetta, Omega World FX, Opinion of Mine, BGP Automotive, Patriot Spalding, Bill Bryant, Michael Holiday, Scott Behringer, Leroy Gibbons, Russell O'Mahony, Next Up 4E, Shane O'Mac, Joey Davis, Brian Ningle, M. Curry, and David Haddock. Thank you all so much for making your bad financial decisions with me. And my question to you is, are you excited about these changes from ULTY or from YieldMax for ULTY, or is it a little too late? And I will talk to you all later. Bye.